You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the world of vol? Well, spoiler alert, it's a lot. Gonna be a banger today. Strap in, listeners. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been binging and mainlining. Thanks to all of you who've taken the time to check out the Hot Options Report, the latest addition to the network. Yeah, we didn't have enough going on, listeners. We had to add 3 new shows pretty much in the last 6 to 8 months, including one just in the last couple of weeks. So there you go, listeners. More content coming at you. Yet another reason why, if you're just listening to Vol Views, what are you doing? You are missing out. You got to check out the full network wherever you're getting this show. And of course, if you think you can handle it, if you think you can handle the official after party of Vol Views, known as Options Oddities, going to be a banger today. Options Oddities 200. I secured a special guest. Should be a fun time on the old Oddities 200, where we break down some weird, wild activity. Only place to get that, theoptionsinsider.com/pro. Hope you got in there before today, because then you got your name in the hat for the July Pro Trading Crate. Of course, now it starts over again for the August Pro Trading Crate. We will have the drawing soon to decide who the winner of that was. But before we do that, let's find out who's joining us on the old program today. Let's go around the horn out to the hinterlands of Chicago, where we are joined once again by a man who is feverishly calculating VIX weekly options profit and loss as we speak. None other than the once future and present Dr. VIX, Mr. Russell Rhoads, now holding court at Indiana University. Mr. Rhoads, welcome back to the show. How goes the furious calculations?
As always, very, very happy to be here. I think I gotta run some more numbers, but I'm hung up on all this weekly trading action that happened today. Do they just intentionally mess with us on the first Friday of Lollapalooza every year? Because I feel like I really feel like about 80% of the time, traders think they're going to go trade the open on Lollapalooza and then get to head over and they're going to be stuck on the floor until the close because of the excess, the Friday afternoon summer volatility that we all are normally used to. Just doesn't seem to carry over for Lollapalooza.
I'm always out of town for Lollapalooza. In fact, I'll be heading out for this one just because we're near it here in the studio. You don't want to be near all that madness. I was out of town last year too, of course, when the entire market fell out of bed. Good stuff. Will we see repeat of that this year? I mean, we're perilously close to August 5th. Who knows what will happen, listeners? So joining us to break down this momentous period in volatility, our good buddy, Mr. Matt Amberson, the Auto Father, creator of rogue AIs left and right over there at Orats. Mr. Matt, welcome back to Volatility Views, sir.
Thank you. I didn't even know Lollapalooza was starting. And we actually have a new auto that's in our dashboard that actually looks at our data. So you could ask it questions like, what's the volatility of Apple right now? When are earnings coming up for this, that, so it's pretty darn cool what AI is doing for us, Mark.
I got a little scared when you said we have a new auto in. I thought you were going to say new auto in your house right now, and he's watching you as we speak, watching you as you sleep. His cold red eye, impassive, ever unblinking. All right, listeners. With all that fun assembled, let's dive right on into a wild volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, listeners, welcome to the Vol Review. I told you we got a banger on our hands, and we do. It's not quite Loggins territory, but you know what? At this pace, if this keeps up, we might be in Loggins territory by the end of the show. Wouldn't that be wild out there? Just when we were debating a few weeks ago whether the Loggins was dead, we could put him away for the rest of the year. And I said, I don't know. He always likes to make some surprise guest appearances. We're not quite there yet, but let's just say maybe the band is starting to warm up in the green room because, listeners, we got another banger on our hands. Our buddy, a good friend of the show who's been on many times, Scott Nations, asked this on Twitter right before the show. He has a good question. He says, why the hell does the Fed announce several days before Nonfarms? Something should be different there. Maybe Nonfarms should be before the Fed or vice versa. Obviously, the Fed has access to data that we do not early on, listeners, but still a good question. Because Nonfarms coming out of the gate today, and I think, spoiler alert, it sucked. That number was terrible. I was reading some breakdowns of it. One of the breakdowns I read pretty much described it as, it's hard to describe just how bad the July jobs report was. Only 73,000, I should say, new jobs. That's pretty bad. But also, all those jobs just came from healthcare. You take healthcare out of the equation, nobody's hiring anybody anymore. On top of that, our previous months, going back to June and May, they didn't look bad back initially, right around 150,000 new jobs each those 2 months. Yeah, all that's gone, 14 and 19,000 now respectively. So the revisions pretty much took away every new job that was created in those months, which again, kind of goes back to the economics is the dismal science after all out there. And sometimes you got to wonder, sometimes these revisions are pretty sizable. How do they get it so wrong? But that's a conversation for another day. Unemployment, of course, another key thing the Fed likes to watch, ticking back up. They're saying the only reason it's not going up more is because people are getting the hell out of the labor force entirely. If that's not enough, of course, we have tariffs kicking in across the board. Decent earnings from Apple. We'll get into earnings in a little bit with Matt, as well as maybe not so great earnings from Amazon. So all that mixed into the heady stew today that came in this morning and just gave this seemingly endless bull rally we've been on since April 8th just a huge gut punch, just right to the gut. Uncle Mike, wherever he is, just doubled over in pain and collapsed to his knees because the bulls are getting taken to the woodshed today. S&P off about 1.7% right now. A NASDAQ off over about 2.25%. The Dow off about 1.5%. VIX cash is ticking up so fast, I can't even keep up with it. It was just up, at a 20 even right before showtime, then at 20 and a quarter. We're now hanging out at 20 and 3/4, listeners, which puts VIX cash up 5 3/4 points from where it was this time last week. So like I said, if this pace keeps up, we'll be playing the logins by the end of the show. So wild times. Hope you're strapped in for a banger out there, listeners. Our old pal Volley, a.k.a. the aforementioned Scott Nations, Just the Facts, ma'am, at the money vol measure. That's at about 16 3/4, up about 4 3/4. I'm sure if I re-racked it right now, it'd probably be closer to 17, but things are just moving too fast, listeners. And our old pal VIX, after getting down to a nice sleepy 90 last week, roaring back to life, up to a 107 right now, up about 17 points from where it was this time last week. So spoiler alert, Things are spicy out there. Mr. Matt, you have good timing when you come on the show. You tend to pick good ones because stuff's always popping off. Even today, kicking off August, usually kind of one of the sleepiest periods of the year for vol, and you get a banger nonetheless, sir. What's catching your eye out there, sir?
If you remember, Mark, we thought that this July earnings season, that of course is now into August, was going to be a big one because vol wasn't that high. And whenever that happens and there's some uncertainty out there, people watch earnings a lot more closely. And lo and behold, that's what we're seeing. So I hate to say I told you so, but I think we told you so, Mark.
Well, we've been saying for a while, just looking at the numbers, and we'll get to your earnings vol data in a little bit more detail. But just looking at the numbers we were crunching, and the long-term average is already pretty lofty around a 119, and we're blowing that away right now in the first couple of weeks of the season. I mean, if you just buy earnings vol right now, listeners, and let it rip. Obviously, there's a few outliers out there like Meta and Microsoft that are kind of stealing the thunder, but still, it is a hot time on the earnings vol front. So if you like earnings vol, we'll be getting into all that in a little bit. First, Mr. Rhoads, I know you like to flirt with the dismal science. Looking pretty dismal today out there.
Well, the first thing and you touched on it a little bit. Years and years and years ago, Bill Clinton actually on a Thursday afternoon slipped in the Rose Garden and kind of gave away an employment number. So he said something like it was going to be better than expected or whatever, and whatever he muttered was dead on. Maybe they don't share it with Trump. I don't know. Maybe they stopped sharing it with everybody because if you watch Powell talk, he's like everything's kind of okay. I don't feel like he would have been as okay with the economy and his comments if he had known how bad today's number was going to be. And as the day came to an end on Wednesday, we went from about a 60%, like beginning of the day, about a 65% chance of a cut in September, down to 40%, goofed around that number all day yesterday, and now we're up to an 87% chance that we're going to get a cut in September, which is the highest that number's been for the September meeting since last month. So we went from pretty good chance of a cut to no cut to a very good chance of a cut in 72 hours, which makes volatility fun as well. But what was kind of another thing that I find kind of interesting is typically, and what I feel like I've been seeing for months now, is a nice relationship between that number. Whenever it looks like the market thinks we're going to get the cut, the stock market rallies. And that number was about 40% before the employment number and jumped right. In fact, I think it was 36 right before the employment number and jumped right up to 75. And the stock market didn't follow. So what people, that whole good news is good news is bad news type thing. We may be going through a shift where where the stock market's not too wild about a rate cut because there's actually a reason for the rate cut, and it's not just something that's going to make it easier to do business and maybe boost the stock market. So I feel like we've gone through a very strange transition over the last 3 days with respect to how a lot of these macro numbers interact with each other.
It seemed like we were in that, you're right, we were in that zone, I want to say 6-8 months, maybe a year ago, where bad news was good news and good news was bad news for a while again. Then it kind of seemed like it settled out and the world was right side up again. But you're right, maybe now getting a little bit topsy-turvy again out there. Speaking of topsy-turvy, there's a reason why we have Matt on, not just to keep us safe from his rogue AIs that are lurking in your house all the time listening, but of course, earnings season popping off right now. Again, we don't get a chance to talk earnings vol that often here on the show, so it's always fun when we get to do it. Well, let's see if I can even drag out the music for a little bit of the old earnings volatility report. Here we go.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
I had to dig for a little bit, but I found it. All right, welcome to the Earnings Volatility Report, the segment that Matt and I do all the time on the advisor's option. Don't get a chance to do it here on VolViews very often, but it is earnings season. We were just saying yesterday on the option block with Uncle Mike, it's kind of nice to be able to sink our teeth into micro events like earnings now and maybe look past the Fed for a little bit and these macro things. Obviously, we still had tariffs. Obviously, there was still a number, but we were hoping to be able to look past the macro. And then, of course, you come in today and macro says no and smacks you in the face and says, pay attention to me again. But nonetheless, there is a lot popping off on the micro front this week, listeners. Big names popping off. Tuesday, we had SoFi, PayPal, Boeing, Visa, Starbucks, and good old Mara out there. Mara, if you've been listening to our crypto rundown, it's been an interesting one. Maybe have some trades in that coming up a little bit in options oddities. Wednesday, we had Meta and Microsoft, two of them really kicking off just the outperformance to the upside. Robinhood, not so great. Qualcomm and Ford, also bit of a dumpster fire as it usually is. Thursday, yesterday, two more bangers. Apple and Amazon, and then Coinbase out there, Roku, MasterCard, and today, if anyone's paying attention today, Exxon and Chevron. So just hot, spicy stuff. I've said it before. If you're listening to the show, if you're intrigued by earnings vol, maybe I'm biased, but I think some of that earnings vol stuff we're putting out there for you folks, courtesy and Matt and all of his crew over there, is probably some of the best earnings vol data you're going to get, certainly for free. It's the best out there. So make sure you're checking it out. TheOptionsInsider.com. Click on the Options News and Articles tab, and you can go back through all of our history of all these numbers. There's a lot of data there, listeners. So if you want to see how the season is shaping up, you can go do that right now. Spoiler alert, it's hot. It's spicy. Mr. Matt, I won't bury the lead anymore. It is your data after all, sir. A wild start to earnings season. What is catching your eye, sir?
Well, not only is it wild from if you own volatility, own straddles, we measure, and it's paid off. I mean, the way that we calculate that is we look at the extra volatility in the earnings months, and then we move those down to a rational skew term structure, and then figure out approximately what that move would have to be in order to make that extra volatility rational. So we get an implied earnings move. Let's just say for Apple, it's somewhere in the 4 to 5% range. And then, we've done that every year since 2007 or something. And then we come in and we say, well, what did Apple actually move? And so we have this comparison between the implied earnings move and the actual earnings move. And we show that graphically on our Orats tools. And we also present it in a earnings season report. And the earnings season report, we've been showing, since well before the pandemic, and talking about what drives the overall, who makes money. Is it the owners of volatility around the announcements or the sellers of volatility around the announcements? And there's a high correlation between how high the volatility is in the market in general and who's making markets. For example, if the volatility is low in the market, people pay attention to earnings, and the earnings moves tend to be outsized of what is implied, and the opposite when there's a lot of volatility in the market. So we've seen that quite a bit. And so this season, we've seen some actual even more than we've expected. So we're seeing owners of volatility up almost 50% on their money, which is crazy. But there's been some big moves, and I think people are very worried. And then there are big moves, and there's been big positive moves. I mean, the average beat is about 7%. The Mag 7 and the mega caps are responsible for probably 14% of that, but you're still getting 3.5% from the other companies. And, there's earnings growth out there. I mean, some's lagging, like our energy is lagging, Eastman, Fluor, Nike, some of the bigger companies are lagging, but a lot of the, tech companies are doing well out there. So I would shudder to think what would happen if these earnings were poor and we came into this earnings season. So, but I think actually it might not be that. It might be just, it's shocking to the upside for people to see, as Russell was alluding to earlier in the show, there's a lot of people negative on earnings, and these companies are coming out positive. So that's what we're seeing out there, Mark. It is quite something to see this much return on buying straddles around earnings. So it's probably the biggest one that we've seen.
I think this is. I was going to ask you if this is the biggest, because by my back of the napkin math, I haven't gone all the way back to when we first started crunching these numbers, but that's pre-pandemic, obviously. But it looked like it's the hottest, spiciest one we've seen. We were in the middle of recording shows like the Hot Options Report earlier this week, right after the bell, when Microsoft and Meta were coming out, and we were talking about some paper that looked kind of outlandish at the time, 50-plus handle out of the money calls expiring in a day or two for substantial amounts of money, $5 and more. And by the time we were able to even look at them in the after hours, the news was already out, and those calls are already deeply in the money. It's like, wow, these are some serious moves on some already well-capitalized names. So it was wild stuff. If you're not checking out the earnings vol, listeners, you should be this cycle, if none other. So make sure you're checking out the data over there, theoptionsinsider.com. As we keep on rolling back to the land of vol, our chat's getting all worked up about Trump potentially moving nuclear subs off the coast of Russia. If that's true, that's also probably going to add a little bit of spice. Never a good thing when we see nuclear saber rattling going on out there. But let's keep rolling out to the land of the vol surface, listeners. This is another one where we can't update this one fast enough. It keeps going and going. So we're just going to freeze it right about where it was when the show started. I'm sure it's probably even spicier now if we react it. But coming into the start of the show, remember, last week, that AUG future had been knocked down about a little under 1.5 points, about 1.3 points. It's gotten all that back this week. It's up 1.3 points out there right now. If I go run it again right now, yeah, it's gained another point since we started talking, almost exactly. So it's up 2.3 points now. That front AUG future's at right around 20 and a quarter. And the SEP future was up about a point when we were kicking off the show. Looks like that one's gained about half a point since we started talking as well. So it's up about 1.5 points now. So things are looking spicy out there, as you would expect. Even said, going all the way out to April of next year, looks like the highest we get on the curve. It tops out right around 22 2/3, which obviously is elevated, but also maybe not as high as you might think, given everything we're seeing in this front portion of the curve. At that rate, if this all keeps gaining value, we're going to be backward pretty darn quick out here on this curve. Not quite there yet, but we're within spitting distance. Mr. Rhoads, what is catching your eye out there in a pretty wild curve today, sir?
Well, you mentioned that it's a bit elevated, and luckily you didn't use the F word, so I get to talk about that part. From October to April, the spread is 85 cents right now. So even though we're elevated and we're up in the 20s, and everybody knows how obsessive I get about the flat curve, August is at about a point discount, and then September's at 21.20. But then when you get out to October through April, it's another one of these flat situations. And when we have a flat curve, I always say that there's an anticipation of even more excess volatility because there's a lot less certainty. And some of the testing that I've done on it so far just kind of goes along with that. We're not flat where it would pass the flat test for my testing, but seeing October through April in that narrowest range, with with VIX up, over $4 and VIX up over 30% on the week, and I'm just trying to get Mark Sebastian upset by quoting VIX changes in percent. So I'm always afraid to talk in my book, and everybody knows I've been bearish longer than I probably should have been. But if anything, the VIX curve, it's indicating a lot more uncertainty once again, and maybe it's reflecting some of the stuff that I was saying, that the economic numbers relative to in the derivative odds pricing not doing what you would expect them to do in conjunction with each other starting Wednesday afternoon. That probably feeds into an awful lot of uncertainty with just about any other financial market right now.
Mr. Matt, same question for you. The last time you were on with us about a month ago, you were kind of surprised at the disparity we were seeing between the cash and where the futures were in the front month. Well, what is catching your eye out there right now on the vol surface, sir?
Yeah, didn't we find out that that was one of the biggest gaps?
It was one of the largest. Yes.
Yeah. Yeah. I mean, now what is the spot?
Oh yeah, you were dead on with that. I apologize for I meant to. I had a little note here to give you kudos on that one, but you were absolutely correct, and it continued to widen. And you were being given credit on Fridays, but now face to face, I wanted to give it to you real quick.
Well, I need that for my.
We all need a boost.
He needs his daily affirmation, like Stuart Smiley.
Yeah, I need. Yeah, I'm special, and people like me. Yeah, but it's always a fun show with Russell, and what I'm seeing right now is, it looks like we're falling out of bed in the market, but the term structure is still kind of flattish. I mean, it's going up a little bit in the front months, but if you look at the futures term structure, I mean, I'm seeing it kind of flattish. Is that what you're saying, Russell?
Yeah. Once you skip once you skip August and September, it's now down to about a 70-cent range while I was talking about it, which I feel like, if anything, it should be curving up at least a bit more than that if there are any long-term concerns with respect to the markets. So I'd say the flatness farther out on the curve it's just uncertainty. Are we going to follow through here, or are we going to bounce right back like we normally do? But we're going to have it's not just going to fall here and sit here as far as the equity market goes. That's kind of how I try to interpret it.
Yeah. So Orats calculates a contango number with the actual S&P 500 options, and now contango has gone negative. So that says backwardation. So it might not look like it in the VIX futures, but in the options themselves, Orats is calling a now slight backwardation. So contango is coming down, and then we measure things like the SPY implied volatility in relation to the components, and that when that gets low, that shows a strong market, because that's what you want. You want diversification to help a market, and when that relationship starts going towards 1, which it's not near 1 yet, but it's going up now, that's another sign. So we're seeing some, negative signs now coming out of the market, not surprisingly with all that's going on. But, so, my perma bearish stand on my, when I'm not perma, I was a little bit bullish and not perma bearish. Now I'm getting a little bit more bearish, Mark. So that should make you happy.
You're like Russell. You're always kind of bearish, but you're right. It's starting to get a little bit louder out there today, which, again, hard not to on a day when it's red kind of across the board. Days like this, listeners, usually translate into a little bit of volume out there, and that's exactly what we're seeing. I'm trying to remember the last time we were north of 1 million at this time of the show in VIX. VIX has been kind of languishing for a little bit, so looking pretty spicy. Definitely April 8th. I'm sure it might have happened once or twice post then. I'll have to go dig into the shows to find out. But yeah, this is a spicy one. 1.25 million contracts on the tape already in VIX land. Last week, if you add up most of the week, you wouldn't get to 1.25 million contracts. So making up for some lost time out there. The ADV reflecting that. The ADV is 676,000 right now. That's down 43,000 from this time last week. Obviously, with today's paper, that's gonna be revised north, like our economic numbers were revised south today. What's going on in VIX options? What's open for size out there today? Well, first off, we're seeing a decent OI building up because it cost you 219,000 contracts to break into the top 10. Once again, that gets you to our old pal, the SEP 80s, holding court at the top 10 spot or number 10 spot, I should say, for a while. By the way, we are still 8-2 calls over puts out there. I wonder if today's big move will shake that up. Again, number 10, 219,000 of the SEP 80s. Number 9, 222,000 of the AUG 42 halves. Number 8, 230,000 of the AUG 30s. Number 7, 243,000 of the November 47 half calls. Number 6, our first of 2 puts in the top 10, 243,000 of the August 17 puts. Number 5, 245,000 of the Aug 20s. Number 4, 270,000 of the October 60s. Number 3, our final put in the top 10 this week, 283,000 of the Aug 16 puts. Both of those looking kind of like distant memories right now. Remember those glory days when we were kissing a 14 handle in VIX Cash, listeners? Number 2, that's why the Rock Lobster isn't here today. He's busy trying to close all of his VIX puts before it's too late. Number 2, 326,000 of the Aug 35s. And number 1, 436,000 of the Aug 25s. Looking better every minute. But you know what's always looking good? It's Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, I believe you have crunched 2 hours worth of weekly options analysis. Let's see if you can squeeze it into the rest of the show, sir.
Well, there's so much to talk about. I'm going to go somewhat quickly, and I started looking up trades today, and I'm like, I don't want to take everybody's time. All right, so on Monday with VIX, and this is a pretty important trade, with VIX between 15 and 1540. Throughout the course of the day on Monday, somebody was buying the August 6th 18 strike calls and selling the August 6th 20 calls. They were doing this for a cost of 26 cents. I came across 9,175. I think the actual volume was pretty close to 10,000. And it looks like they've gotten out of about half of it today at $1. So that's what I was trying to figure out was, what's going, are they just selling the calls? Are they selling the calls and buying back they selling the 18s and buying back the 20s? It looks like they are selling the 18s and a good portion of it was done at $2.39. And they bought the 20 calls back at $1.39. So 26-cent cost. And honestly, I've started looking at these on Thursday night before Friday morning. I'm just putting it together a little bit earlier so I can get it over to Mark. And when I was putting it together last night, I was like, I bet they did this trade thinking they'd get a vol spike either out of FOMC or the employment number. And if not, they blew 26 cents. And seeing them trade out of it gives me a little validation to what I was thinking there. Later on Monday with VIX at 1527, somebody bought 750 of the July 30th 18 puts for 246. Break even on that was 1554. As we feared and talked about last week, the VIX settlement was kind of elevated at 1586 this week, so they lost a little bit of money on that trade. Tuesday with VIX at 1482. Yes, 14. And now we're talking 20s. Somebody sold 200 of the August 13, 16 puts for 45 cents and bought 200 of the 14 puts for 3 cents. Took in a 42-cent credit. Again, VIX was at 1482 and they did that. I hated this trade, but boy, are they looking smart now. VIX at 1512, just a buyer of 1,000 of the August 6th 15 puts for 15 cents. Taking a shot that volatility will be very low into August 6th expiration. I don't think they're going to make money on that trade. Wednesday with VIX at 1594, we had a buyer of 100 of the August 13th 1450 calls for 320, and they sold 100 of the 16 calls for $1.93. The net cost on this is $1.28, and the maximum profit or the maximum value is $1.50 if we get a VIX settlement above 16 on August 13th. I don't like spending $1.28 on that trade to make 22 cents. I haven't gone back through it and tried to figure out a better way, but if you think VIX is going up, I probably could come up with a better way to have done that trade.
How mad is this guy that he sold those 16s right now?
I'm sure they're not particularly happy at all. Just shut up. I mean, yeah, that was another part of it. I was thinking, maybe because, VIX was at 1594. It was practically at 16 at the time. But it just, the break even on it was it just a bad trade. It just doesn't make a whole lot of sense, risk reward wise for me. Yesterday, VIX at 1532. Maybe somebody's feeling better about this. This was there were a whole lot of trades I hated. And with VIX at 1532, there was a buyer of 454. They did it in 2 equal lots, 227 each of the August 13th double calls, the 55 calls for 3 cents. Not sure where those are trading right now, but they might be able to sell them.
Matt,
like
that's getting in your junk territory. You like those bad boys? Is 55 enough junk for you, or is that to be higher?
That's, considering we were in the teens, 55
pretty junky.
Maybe makes sense.
Matt, does that qualify as your garbage calls, Mr. Matt? I know you like those.
Love the garbage calls. Anything under 20 cents.
Buy it all, says Matt.
I love it. Yeah, it's only 20 cents. I find that on the ground every day. Just taking a look. Hey, those options are 9-cent bid right now.
See? That just proves your point, Matt. You don't need to get to 55 for these things to make a 3Xer.
I love it.
So there. Yeah, if anything, I would be, they could sell the 80 calls right now for 3 cents and lock in a break even.
Free verticals for days in VIX.
So, and let's see. That was yesterday. And they got a 3-bagger on that. Finally, last week, I got real excited about somebody buying 7,000 of the July 30th 16 puts and selling 14,000 of the July 30th 15 puts. Settlement came in where they lost money on the trade. They had done that trade and it cost them 24 cents. Their break even was between 1576 and 1424. And if you recall, I was saying it's the first time I've been worried about the downside for a trade.
Yes.
You got to laugh at yourself when you're wrong. But it was held through settlement, and they ended up losing about 8 cents on it. Settlement, they got 16 cents for that spread. And not a weekly trade, but one I have to keep an eye on. That ridiculous 200/20 D bear put spread using VIX options. It's still open.
How much is that guy hating that trade
right now? Well, it's not so bad.
Really?
If their break even on it is like 23 at expiration.
I'm just saying, but the outlay. I mean, he put so much on the line for that.
I know.
And a good chunk of that is gone right now. So he's got time, obviously, but just wild.
But still,
we don't have time to regale Matt with all the nuances of that ridiculous trade now.
Matt, it's an awful trade. Just take our word for it.
All right, let's keep rolling. Let's see if we can find any equally awful trades out here today. Like we said, today, a hot one. Today, parsing the VIX numbers is kind of like looking for the individual droplets in the hurricane. It's all hitting you in the face today, listeners. VIX already at 1.25 million contracts. The hot dog out there today, though, you can probably guess it's probably going to be some calls. The question is which one? It's the AUG 25s, listeners, lighting it up to the tune of 110,000 contracts out there right now. If you're wondering, those are going up for $1.02 for size out there today. Number 2, we have the 16.5 puts going up 73,000 times today. Number 3, 70,000 of the AUG 30s. Number 4, we have 50,000 of the AUG 18 puts. Both of these were trading for around similar prices when the cash was kind of equidistant between them, right around 21. So we said, hey, AUG 18 puts or AUG 25 calls, both trading for close to $1. Gun to your head right now, which one would you rather buy? And our audience, overwhelmingly, almost 3/4 of you right now say you want to buy the AUG 18 puts. Only about 28% say you want to buy the AUG 25 calls. That just went live a few minutes ago while Russell was talking, so I expect that number to evolve over time. It'll be live the rest of the day, so you folks listening on the podcast can get at it as well. I know a lot of you listen on Saturday as well. It's kind of like your Saturday relaxing time to listen to VolView, so in that case, you can check out the results for yourselves over there at Options, but the poll will be done. Either way, a spicy day out there. Number 5 today, about 47,000 of the SEP 25s. So a couple of puts actually sneaking into the top 10 out there today, or top 5, I should say, out there today. Yesterday, kind of the more seasonally appropriate paper we expect, 690,000 contracts on the tape. The big dog out there was this 60-110 vertical. Went up for, I think, 24, 25 cents. 100,000 times this thing. Definitely opening on the 110s. Couldn't really tell on the 60s. Though if they're rolling from the 60s to the 110s, you have to kind of ask, A, what are you doing? B, aren't you mad that you didn't wait a day? Because those 60s looking, I mean, the 110's not looking bad now either, but 60s certainly looking a little bit juicier right now. Either way, that was the big dog. You take that out of the equation yesterday and you're shy of 500,000 contracts in VIX. The next biggest trade or most active contract was 30,000 of the AUG 25, so a big fall off from 2 to 3, about 70,000 contracts. Number 4, 30,000 as well of the SEP 30s, and number 5, 27,000 of the AUG 15 puts. Man, do those look pretty far in the rearview mirror. They went up for an average price of 17 cents. Probably get all you want right now for just a couple of cents if you want to dive right into that bad boy. Wednesday, 836,000 contracts on the tape. The big dog, once again, this OX 60 par. That seems to actually, that's different. We were talking 61.10 on Thursday. Wednesday, it was 60 par. So someone's got a weird axe to grind on October upside, but they're choosing different strikes. Went up 75,000 times on Wednesday. I don't have the exact price there for that one. Number 3, 70,000 as well of the SEP 15 puts. Definitely opening on those. Number 4, 64,000 of the AUG 16 puts. And rounding out the top 5 on Wednesday, 57,000 of the AUG 25s. Tuesday, a banger. Remember, Wednesday was Fed day now, so not as much paper as you might expect on a Fed day. People kind of keep their powder dry for the first half of the session, quite a bit on Fed day. They're waiting to see what's going to happen, obviously. Then they try to make up for it the second half of the session. Couldn't quite get over 1 million on Wednesday. Tuesday, though, we did. Tuesday, 1.01 million contracts exactly going up in VIX land. So a lot of pre-Fed action going up out there. The big dog out there was 140,000 of the SEP 15 half puts. Those were trading for around 30 cents as well. It seems like 30 cents is the magic number for downside puts. When those puts are trading for that price, people love them for whatever reason. And that was the case on Tuesday. Obviously, if you liked those on Tuesday, you can get them for a lot cheaper today. 76,000 for number 2 on Tuesday of the AUG 16 puts. Man, a put palooza on Tuesday. Number 3, 69,000 of the SEP 17 puts. Number 4, 48,000 of the AUG 17 half puts. And number 5, 40,000 of the AUG 17 puts. Monday, I don't know why they even turned the machines on. 339,000 contracts was all VIX could muster. Compare that to today, almost 1.3 million already. 25,000 was the big dog on Monday of the AUG 18 puts, and the rest doesn't even merit analysis out here. Mr. Matt Russell was just regaling us with his weekly VIX options trades. Anything catching your eye this week in the rest of the VIX options tsunami that is hitting us in the face right now, sir?
Well, just the fact that how much it is, and how much money those market makers are making, because it's tough to get filled. Russell, how are your fills in VIX been?
Not so great. And we actually talked about this over the past couple of weeks, where it's real easy for me to figure out what direction people are doing in VIX weeklies, because they're basically paying the bid or selling on the offer. There's a lot of, not a whole lot of working things in the middle on the liquid VIX options, but kind of the same thing. It usually giving up the midpoint will get you where you want to be, and it seems like you've got to be a little bit more aggressive.
Yeah, I've experienced the same thing. Like, I'm getting good fills other places, but VIX is a rough one. So, that's all I have right now, Mark.
1.25 million contracts, and Matt still can't get filled. He demands more liquidity. Listeners out there, I get it. Things are whipsawing a little bit out there today. Let's get out to the land of inverse vol. If you were waiting for your moment to maybe you were lamenting that you missed a little bit of SVIX on the downside, missed your scoop. Well, the vol gods heard you. SVIX back down to 15 3/4 today, down 1 3/4 points on the week, putting up 9,000 contracts today, which is decent given the fact that the ADV is only 3,900. So all it took was a market meltdown and a huge pop in vol to get SVIX to actually do some numbers. Getting to your point about liquidity, I've been mostly playing lately, it seems, on the vol space in and around SVIX options, and talk about a crapshoot on the liquidity front. Some days you're like, wow, I can't believe they filled me. Other days you could literally hit the bid and they'll hang out for a while. Like, I don't know if my bid's good here. I guess I'll fill you. So it's very much a crapshoot out there in SVIX. But then again, the ADV is only 3,900, so I expect that. VIX, a little bit of a different beast. Mr. Rhoads, what's catching your eye in the world of inverse vol? And are you going to load up for your infamous weekend trade again? Remember, a year ago, roughly, was probably the best weekend in the history of that trade, sir.
I feel like there was another one, but it was in the top two for sure. Yeah, I'll wait till the end of the day and buy me some UVIX. I did some work on, and I know we're supposed to be talking inverse, but I did some work on the price action of the Friday, and should that dictate sizing around getting long volatility for the weekend, and really couldn't find a whole lot there. Did find that there was a mix of nice weekends for owning UVIX, and what happened on Friday, really it was a coin toss relative to the good days. So I'll stick with buying it close to 3:00 Chicago time today. My SVIX, I was finally feeling really good about it, and now we're back down with the 15 handle on it today. But and it's still not a full position for me. It's only like a quarter or so position. I don't know whenever it feels like the markets are back to some sort of normalcy, I'll probably go back to having a much bigger position in it. But it just doesn't feel like it's the right thing to do these days. And SVIX has traded 9.3 million contracts today. Or shares today. That's pretty good. I just wish it would translate to options.
Yeah.
Or options volume, you know what I mean?
Yeah, I think we all kind of wish that, but maybe, a few more days like this out there. Let's run down some of the rest of the vol ETPs, and we'll get what's lighting up Matt's tape in the vol ETP world as well. If you were hoping for a UVIX print and close south of 20, you're not getting it today, at least not right now. UVIX 20 3/4, up 3.5 points from last week. Putting up some size today, 107,000 contracts out there in UVIX, so if you're hoping to get filled on something in UVIX, today seems like your Huckleberry. The ADV is 28,000. That's up 5,000, so moving in the right direction in UVIX. UVXY always putting up numbers. That is the one argument in defense of this neutered product. It puts up the numbers. Today, doing 2x UVIX, 210,000 contracts. UVXY right around 17 3/4 right now, up about almost 2.5 points from our last show. The ADV is 81,000. That's moving up 2,000 a week as well. And everyone's favorite, Russell's beloved VXX out there. I know people have been hoping for this magical erosion to kick in. If you were hoping for VXX close shy of 40 this week, yeah, you're not getting that, unfortunately. 46.65, up almost 4.5 points from where it was this time last week. So this has been kind of like clockwork. We get the erosion. Something happens Thursday or Friday that just resets the clock on the vol erosion front. It's been frustrating. I know a lot of people out there in the vol erosion game, and I know a lot of people have been watching OI go to die on the downside in VXX. And unfortunately, it's like today's going to be another one of those days. 86,000 contracts on the tape in VXX. That compares to the ADV of just 32,000. So VXX putting up some numbers out there. Mr. Matt, anything catching your eye in the universe of vol ETPs? That could include maybe some other product I didn't mention, sir. What's catching your eye?
Yeah, so Orats is releasing our new beta version this week. We released it, I should say. And we do have one strategy that's a ETP, or whatever UVXY is. So UVXY actually has a strategy, an iron condor. So look pretty good. So one of the things that we do is we use our indicators on a back-tested strategy, and we try to time it, and we have these p-values, which is the probability of a indicator not being due to total chance. So we have this p-value that we put out there. And so I was excited to come back on because we have a UVXY in our list. So we're pretty happy about that. Otherwise, it's kind of difficult to find those. But like you say before, UVXY, they do put up some size, and we get some pretty good numbers on them, and we're able to slice and dice them, Mark.
Do you want to hit us with the UVXY trade really quick, or does it take too much time?
No, it's a iron condor, but it's timed. So it is it in? No, it's not in the market right now, but it's an iron condor, 45 days, kind of tight, 30-50 delta. So and then we're kind of in and out as its correlation goes up and down is our indicator. So that's as much as I could say, Mark.
The rest is secret. You got to go talk to Otto out there. You don't talk iron condors that much, so just an iron condor alone in vol is kind of fun, let alone in UVXY. Interesting that it shows UVXY over UVIX. I'm guessing maybe the liquidity is probably playing a role in that for a four-legged spread like that. Might be a little challenging to get that off in UVIX, but interesting stuff out there. Mr. Rhoads, anything else in the vol ETP landscape catching your eye, sir, before we roll onto the crystal ball?
No, but I like that 30-50 delta idea, which gives it some directionality. I kind of have a vision of what's going on there. I think that's a great thought. And considering I've spent a third of my career trying to come up with fun ways to trade those things, I never thought about that one. So hats off, man.
There you go.
Big time.
There you go. Hats off to Otto as we keep on rolling and go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get weird, we get wild, and spoiler alert, it was Russell and myself on the show last week, and neither of us had a 20 handle in VIX cash. By the way, coming into the end of the show here, listeners, markets are looking pretty close to where we were at the start of the show. S&P off about 1.75%, NASDAQ off about 2.33%, Dow closing in on 1.5% to the downside. VIX cash vacillating right around the 21.5 level. Let's get it a precise one, actually down to 21. Either way, it ain't close to where we were last week. I was at 14.75. And that hurt me. As you recall, Mr. Rhoads, that hurt me to say a 14 handle and speak it into existence. But I did. I bravely did last week, listener. Look what I did. I ended up breaking the market as a result. And Russell was at a 15.5 on the show. Spoiler alert, we spoke a 20 handle into the ether. So no joy for any of us. So we are the biggest losers this week. Matt didn't get a chance to lose last week, so he gets the dubious honor of going first. What are you feeling for this time next week, sir?
This time next week, VIX 1950.
Ooh.
An interesting year. Is it an interesting vol prediction, listeners? I guess we'll have to see next week. Start getting yours in if you're listening live. If you're listening after the fact, get them in. If you're listening if you're listening by the end of the day today, if you get yours in, you can be entered to win fabulous prizes. All right. I guess, Mr. Rhoads, technically you were closer, even though we were both about 5+ handles away. So you get to go next. What are you feeling, sir?
22-26. I think we're going to lurk around up here for a while.
You had that one ready to go. 22-26. I don't even have a chance to write it in yet. Here we go. I was doing something. All right, here we go. 22-26 for Mr. Rhoads. That leaves me last but not least. Listeners, I didn't like speaking a 14 handle into the ether last week. I'm obviously not doing that. That'd be a heck of a reversion, though, out there. All is right with the world. I've been saying for a while, I look for a little bit more spice out there in vol land. So I don't mind something right around a 20 handle next week as well. I'm going to say 20.55. So that's our market. Matt's at a 19.5. I'm 20.55. So kind of playing lower Goldilocks this week. And Mr. Rhoads feeling the juice at a 22.26. All right, that's going to do it for us on Vol Views today. But if you're hanging out in the live, stay tuned. We've got Options Oddities 200 coming up. Yeah, it's going to be a banger. Matt has graciously volunteered to dive into the fray once again. What are we going to talk about? Who knows? Whenever Matt's on, is always wild paper, quantum computing, straddles, and all kinds of weird stuff. So stay tuned for Options Oddities. Going to be a banger. If you folks have some trades you want us to talk about or anything else, you're hanging out in the live, start getting them in now. If you're listening after the fact, then you missed it. But head on over to theoptionsinsider.com/pro. That'll get you access, of course, to the Pro podcast feed. You can hear all 200 episodes of Options Oddities if it floats your boat, as well as, of course, all the awesome Pro Q&As we've done, and gets your name in the hat for the August Pro Trading Crate. And it also gets you in for all the other future upcoming Options Oddities and Pro Q&As. We had an AMA this week, all kinds of wild stuff hitting the feed. If you were in the live this week, you were overwhelmed. Your ears were overwhelmed. We had a quintuple show day this week, so wild stuff out there. But that said, Mr. Matt, before you get to do a little potty break between now and the next show, sir, what is going on in the world of Orats? And if folks want to hang out with Otto, maybe have him come to their house, where should they go? What should they do?
Yeah, Orats.com. As I mentioned, we have a beta version out. We've got a lot more trade ideas, statistics, finding back tests, helping our listeners. We have put many of the fixes and improvements in for our clients, so it's been a lot of fun. We've had our record months over the last couple of months at Orats, so come on over to Orats.com, Mark.
There you go, Orats.com, Orats.com, the place to go to kick the tires and light the fires. And you can find out all the strikes and everything else on that sweet UVXY Iron Condor, listeners. All kinds of good stuff percolating over there. Matt now gets to take a break before he comes back in a little bit to talk some wild paper on oddities. And Mr. Rhoads, sir, where should folks go if they want more Russell Rhoads goodness in their lives?
Just anything I do, I put out there on Twitter. I got a handful of things in the hopper that are getting ready to come out. I'll finally, the person that I'll be partnering up with in a new venture, I'm not supposed to say anything till next Monday, so I'll finally be able to talk about it next week. It got pushed out from July 1st, and now I'm being pushed out till August 8th. So 8/8, which is a significant day in Chicago. It's the first Cubs night game. It was on 8/8/88. Yep.
You could say it. It's me. We are partnering up on our first official beauty pageant venture. So look forward to more information on that coming soon, listeners. In the meantime, give him a follow on your favorite social media platform. 2 S's, 2 L's, RHOADS. That's going to do it for us on the old Vol Views program today. Back again in a few minutes for our friends on the Pro with a little bit of options, oddities, goodness. Back again after that for you on-demand folks. You get one more tasty nugget, even though the Pro folks get it first in their air holes, of course, with the addition now of Thor. The Hot Options Report to the network comes at you after the close every day, breaking down all the action, and it's going to be a banger today, so look for that. Yet another reason why you should be subscribed to the full network, wherever you're getting your podcast, listeners. Then we're back again with a little bit different schedule next week, so we'll see you back here pretty soon. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.